To commodities now, and it's not just Brent crude, but also iron ore prices that have hit multi-year lows in the past month. Our reporter Martina Fuchs spoke to a handful of analysts, as well as the China Iron and Steel Association, to get their take on the price outlook.
Iron ore prices tumbled to a 5.5-year low of $63 a ton in January, hit hard by concerns about weak Chinese demand for the steel-making ingredient. At the China Iron Ore 2015 conference in Beijing on Wednesday, industry experts predict that prices might be near the bottom and we may see a rebound soon.
But even at $63, $64 per ton, they're still comfortably above some of the cash operating costs for the big miners. And remember, the three biggest miners are producing 70% of the volume of iron ore globally. So from that perspective, there is still potentially more downside in the price before we see a bounce. Yes, our long-term forecasts are for prices to recover, but I think prices will go below $50 per ton before we see that happening.
Prices of the commodity halved last year as top Australian miners such as BHP Billiton and Rio Tinto pumped supplies into the market. China is the world's biggest producer of steel and the biggest consumer of seaborne iron ore. Ample supplies of Chinese steel have also caused the price to slump in recent weeks, after a 14% decline in Chinese steel prices for all of 2014. A Reuters poll of analysts published last week showed a median estimate of $68 a ton for iron ore's spot Asian prices in 2015. The China Iron and Steel Association is more bullish and forecasts prices to average $70 a ton this year.
In the year 2015, will be roughly around $70 is my forecast. But maybe sometime maybe it is down to $60, but it cannot last for a long time.
Last year, China's imports of seaborne iron ore rose almost 14% to a record 932.5 million tons, with shipments from Australia accounting for 58.5% of the total, up from 50.9% in 2013, recent government data shows. The only way now to increase iron ore imports in the face of stagnant steel production may be for more domestic mines to shut down or curtail their output. The association expects more Chinese steel mills to close their doors.
With the weak market and very weak economic performance, there will be consolidation trade.
Some traders are upbeat, however, that the market will improve after the holiday and demand will pick up from the winter lull. There is some hope that iron ore prices have hit the bottom and could find a support level at $60. Analysts here are saying that mills in China have started restocking, although trading is usually muted ahead of the Chinese Lunar New Year, which this year falls in February. Martina Fuchs, CCTV News, Beijing.